It's finally happening. We are making a video about taxes.
As an American living abroad, we are responsible for filing two different sets of taxes. And one is the country that we live in, Spain. The other is in the USA. So this video, we're going to answer all of your questions about filing taxes as an American living abroad, but in the USA, because we still have to file every year, no matter where we live.
We're going to talk with Josh Katz, CPA and founder of Universal Tax Professionals. He's going to answer all the questions we have about filing your taxes in the US as a foreigner living abroad. Get excited. This is going to be a good one. I'm Shawn.
And I'm Lainey. And this is Days We Spend.
Days we spent money on taxes. We actually just started filing our 2024 taxes in the US with Josh and his team. So far, it's been a really smooth process, uploading all of our documents, getting our questions answered, and we're excited to keep learning more about it with you guys in real time.
Hi, Josh. Nice to see you today. Thanks for jumping on this call with us. We'd love to hear a little bit about you and your company.
My name is Josh Katz. I've spent most of my career specializing in U.S. expat taxes. About 10 years ago, I founded Universal Tax Professionals to provide expats with a simple, streamlined solution for filing their taxes while also offering planning and consulting services throughout the process. And today, we're a small team of dedicated accountants committed to delivering a personalized service to our clients worldwide. Our services go beyond tax filing. We also help digital nomads, foreigners moving to the U.S., as well as small businesses with corporate tax preparation, bookkeeping, and tax planning.
We're going to pick your brain about a bunch of really specific stuff, some best practices. So first things first, do Americans living abroad need to file their U.S. taxes every year?
Yeah, so sometimes it's a misconception, but if you're American and you're living abroad, or you're living in the U.S., you need to file a U.S. tax return every year. Assuming you make over the threshold of income, that amount will change based on your filing status. But assuming you're working, you're earning income, or you're earning passive income, then most likely you're going to be required to file a U.S. tax return every year, regardless of where you're living.
The taxes that you've been filing your whole life, it's the same story.
So the form is going to be the same. It's going to be Form 1040. But at the end, right when we find out how much tax you have to pay, most likely if you're living abroad, living in Spain, you're going to pay nothing or pay much less than if you were in the US.
Are there any exceptions to that? It's every country, there's no random country that doesn't have to do this.
There's no exception based on country. The exceptions would be maybe if you aren't earning any money. So that might be one reason why you wouldn't need to file. So as long as you're American earning over a certain amount, then you would still need to file a tax return every year.
And earning includes like a pension type of income.
Yes. So if you're earning wage income, so meaning you work, or passive income, which would include a pension. If you're only earning U.S. Social Security income, that might be another exception why you would not need to file.
What is the threshold for filing your U.S. taxes?
It depends on your filing status. So if you're married filing separate, it is $5, and that's a very low threshold. If you are married filing jointly, then it's about $29,000, and if you're single, then it's about 14. Those numbers change every year. One more thing, so I don't know if I mentioned this. If you are self-employed, then the threshold's $400. If you earn more than $400, then you'll be required to file a U.S. tax return.
For instance, let's say you earn within those thresholds, but you don't expect to owe any taxes, you still have to file, right?
Correct. And the reason is because the IRS doesn't know that you don't owe anything. They're not going to know that you don't owe anything until you file.
So how does becoming a tax resident of a foreign country impact your U.S. taxes?
So actually probably less than you would think, because when you become a tax resident in a foreign country, that's going to change your tax situation in that foreign country. So now you'll be required to file taxes and pay tax in the foreign country. However, in the US, because you have to file a tax return regardless whether or not you're a tax resident of a foreign country, you're still going to need to file. So you may not have any big changes when you become a tax resident in a foreign country. What would change is now that you're paying taxes in a foreign country, you may have more foreign tax credits to use against the US tax that you might owe.
So let's talk about that, because that's something that can get a little confusing, especially if you've never done your U.S. taxes while living abroad. What do you mean when you talk about foreign tax credits? And if there's foreign income, are those two different things or are they the same thing?
Yeah, so foreign tax credits are a credit, meaning the taxes paid in the foreign country can be used against the taxes you would owe in the U.S. So that's one of the main reasons why, even though you have to file a U.S. tax return, you're not going to be paying U.S. taxes because you already paid taxes in other countries. So if you're living in Spain, you pay taxes to Spain. You can then use the amount you paid in Spain to reduce the amount you would owe in the U.S. And because the Spanish tax rates are usually higher than the US, that will usually cover all of the tax you owe on those certain types of income. The other way to reduce your taxes is the foreign earned income exclusion, which allows you to exclude about $126,000 of your income, your wage income that you earned while you were abroad. If you're in another country, in Spain, sitting there while you earn the income, then you can deduct the first $126,000. So if you earned $126,000 exactly, it's as if you earned zero. So you wouldn't owe any US taxes on that.
Can you combine the two, or is it an either or situation?
No. So first of all, the foreign income exclusion can only be used on your wage income. So that would be, for example, your salary or maybe your self-employment income. You will choose which one to use, foreign income exclusion or foreign tax credits. However, let's say you earn over $126,000. Well, now you can use the foreign income exclusion on the first $126,000, and then you can use foreign tax credits on anything over that. So you can combine it overall on the same type of income, meaning your wages, but you can't combine it on the same dollar. So if you use foreign income exclusion on the first $126,000, you cannot also use foreign tax credits on that income. One of the biggest decisions that you would need to make when filing a tax return is whether to use the foreign earned income exclusion or foreign tax credits to reduce or eliminate the amount of tax you would owe. But either way, you're not going to pay the same tax you would owe if you were in the US.
Either way, all of it's good news, because I think Americans were so afraid of paying double tax. And this idea that when you move to Spain specifically, but you're going to be paying Spain tax and you're going to be paying tax in the US. So it's double taxation. But knowing that there's these credits and that you can apply that, it's not double tax.
You're never double taxed.
Is it a dollar for dollar? Is it 1-to-1? So like if you pay, 6,000 euros in Spanish taxes, you get 6,000-ish euros in US credit?
It gets complicated. So it could be a dollar-to-dollar credit, but it could also be a credit, which then the amount you paid, you may be able to use most of it this year, and some of it may be carried over to next year. So it would be a credit, but there are times when you wouldn't be able to use all of it. You have mixed income, so some income from the US and some income from Spain. Now it's possible that they won't allow the full credit. This is where the math gets a little complicated, but it is possible. If you did pay more taxes than you would owe in the US, then those credits can be carried forward in the future. And that could be helpful because let's say in the future year, you paid less in taxes, but now your US tax bill is higher. Well, you can use credits from previous years to reduce the US taxes you would owe.
And it gets technical very quickly, which is why we need help. Everyone's situation is different. If you have income in the country where you reside, if you have income in the US, self-employment versus wage.
Yeah, or a pension earner versus non.
Yeah. Does that also work for capital gains or dividends or pension? The sort of income that someone who's retired would be getting.
So you can't use the foreign earned income exclusion on any passive income. So whenever you have passive income, then you would be using the foreign tax credits. Foreign tax credits can be used on any type of passive income.
Okay, so we're talking about credits and using what you paid in a foreign country, in our case, Spain, in the US. But our first year doing taxes, we ran into a problem. The US tax date is in April, but the Spanish tax deadline is in May or June. How should you structure your taxes? Like, where should you pay first? How should you do it? And what do you do with like extensions and deadlines?
Yeah, so there's a lot of deadlines that you might need to remember for the US tax year. If you have a company, you may have a March 15th deadline, but we'll put that aside for a second. The main deadline that everyone knows is April 15th. However, if you're American living abroad outside of the country, then there's an extended deadline till June 15th. But for almost everyone who's living abroad, what we would recommend is filing an extension before that date, which will give you till October 15th to file. So most Americans living abroad are filing their taxes, by October 15th. And the reason for that is because they're waiting on documents from another country. So you may be waiting on your Spanish accountant. So it's not your fault that you're not getting everything to your accountants. It's yours. You have two accountants now who need to complete everything. That October 15th is going to be the main deadline. And that helps with any timing issue because that gives you plenty of time to complete everything in Spain and then file your US taxes after. However, the most important thing to remember is even though that's your deadline to file, that's not your deadline to pay. The deadline to pay any tax due is April 15th. That doesn't change. There's no extension for the deadline to pay. What do you do if you you have to file a Spanish return and then you file an extension and you'd have to make an estimated payment? Ideally, you know possibly how much that your estimated payment would be based on your previous year's taxes. So maybe every year you make a certain estimated payment before April 15th, and that's fine. But maybe this is your first year moving abroad, or you had unusual events in the prior year. Maybe you received a large distribution from a retirement fund, for example. well, then it's good to work with your accountant and try to prepare, an estimate. If you overpay, then you get the amount you overpaid back when you file your taxes as a refund. And if you underpaid, then you just have to pay the difference.
That makes sense, because you'd want to put the money up so you're not getting penalized. Would there be any penalties or interest if you didn't do that estimated payment?
So there's a lot of different types of penalties the IRS can assess. There's failure to file, and you would only receive failure to file if you did not file by either the April 15th or June 15th deadline, depending on if you're living abroad, or if you filed your extension after October 15th. So if you file after 15th, there's possibly a failure to file penalty. And then if you paid after April 15th, then there could be the failure to pay penalty. Both of these penalties can accrue interest. So once you have a penalty outstanding and didn't pay, then there might be interest on top of it. There's also a smaller penalty for failure to make estimated payments, but that's usually if you have a business or a large tax bill, and that's smaller than the other penalties. So what you really want to do is make sure to pay what you owe before April 15th, file an extension, and file your return before October 15th.
Perfect. So bottom line is you want to pay an estimate first in the US and then file your foreign tax, like your Spanish ones in our case, and then we file our US tax after all of that.
Yes, but I don't want to, anyone to get too caught up on paying the estimate by April 15th, because most Americans living abroad aren't going to owe anything. So if you're not going to owe anything, you don't have to worry about paying by April 15th. You just have to worry about filing an extension and then filing by October 15th. One of the reasons why you might owe is if you also have U.S. sourced income. So that's when, if you have income from the U.S., if you have interest, dividends, investments in the U.S., if you have rental income in the U.S., or if you worked part of the year in the U.S., those would be times that you'll say, okay, let's do some calculations and try to figure out, am I going to owe anything by April 15th? But if all of your income is coming from Spain in terms of wage income or, Spanish investments, then at that point, I wouldn't be too worried about owing anything in the U.S.
When you're talking about Spanish investments or foreign investments, I guess, how are those handled? And sort of what are some of the best practices or things to avoid if people are investing outside of the U.S.?
Anyone's allowed to invest outside the U.S., but we highly recommend you avoid what are called PFICs. It stands for Passive Foreign Investment Company. And PFICs are basically foreign mutual funds or ETFs. So any grouped funds. PFICs, unlike other stocks or shares, these are taxed very, very heavily and take a long time for an accountant to prepare. So any accountant will have a charge based on the number of PFICs you have. So these will be the number of foreign mutual funds you own. And then after that, you're going to have a large tax bill. In no way would investing in these be a kind of a good investment decision because of the U.S. tax you would owe. So we definitely recommend staying away from those. And that's the standard advice. So what are some alternatives you can invest in if you wanted to invest in Spain, or you want to invest? First of all, you can keep your money in the U.S. From a U.S. tax perspective, you're allowed to invest in any U.S. mutual fund, U.S. investments, anything on the U.S. stock market is fine. And in Spain, you can invest in any company, stocks, shares, or real estate or other types of investments. What you can't invest in are mutual funds, ETFs, or grouped funds.
That's actually really helpful information that we hadn't really heard about. You hit on two really important things for us, which we ran into, is the taxes can vary, but also the hassle and the cost of having an accountant go through dozens or even more lines of a foreign mutual fund. So you want to avoid that as well. Okay, so speaking of foreign investments, when you move to another country as an American, you are going to have a local or a foreign bank account. There's a lot of yelling in Facebook groups about this. So we would love a straight answer from a professional. What is the limit that you can have in a foreign bank account before you have to do paperwork? And then once you cross that limit, what is the paperwork? What do you need to file with the US government so that you're in compliance?
Sure. If you have over $10,000 in aggregate, meaning across all your bank accounts. So if you have 3 bank accounts, each with $5,000, then you would have in total $15,000 over the $10,000 limit. Then you're required to file the FBAR form every year. Your tax return is filed with the Internal Revenue Service, and the FBAR is filed with the U.S. Department of Treasury. So they're two different organizations, and the requirement is just to list your bank accounts, list the highest balance during the year. Sometimes that can be a little hard to find the exact day and exact balance. Other times it's quite easy. It might be the last day of the year if you have an account that grows. But you'll need to file that form every year along with your tax return, and that goes to the Department of Treasury. If you have over $200,000 in a foreign bank account, then you'll need to file an additional form called the 8938, which is included in your tax return. So that's now going to go back to the Internal Revenue Service. However, in either of these forms, there's no tax associated with it. So it doesn't matter if you have $10,000 or $10 million, you're still not going to pay any tax on the amount you have. It's just for the IRS and Department of Treasury to keep track of how much money you have in other bank accounts. I try not to mention this to scare people, but there is the possibility of a large penalty for failure to file this form. So it is important to file to avoid that penalty, but it's not particularly complicated. And it's also not a reason to avoid having a certain amount of money in bank account. I do work often with clients who say, oh, well, I made sure to keep my account under $10,000. I think, you won't have to file the form. It's not too difficult to file. So I don't think that should be a reason to avoid keeping money. You don't save yourself taxes at all.
We were trying to limbo under the FBAR limit last year. But now we're over it, so we're filing an FBAR.
Yeah, we finally realized it's not a big deal.
It's not a big deal.
It's not a big deal. It's a painless form.
Let's say you hit that 200,000 by house. Like if you did a bank transfer, you would definitely have to file that. But if you got back under 10,000, would you keep filing every year?
No, only the years where you're required to, you have to file. You don't need to file after.
Is the exchange rate calculated via like a U.S. Treasury kind of rate?
Yeah, so this is very technical, but you'll kind of have two options. So they come up with a yearly annual exchange rate, for the Department of Treasury does and the IRS does. However, because it's supposed to be the highest balance at any day during the year, then it might be different. So they'll accept any exchange rate, but let's say July 1st was the highest balance. Well, you may also want to use a July 1st balance, and there are times when you might say, okay, well, July 1st balance was different than the year-end balance. Most of the time, it's not too different, but you might be in a country where there's huge currency fluctuations. Overall, because you're not paying any tax on it, it shouldn't matter too much. The exchange rates can matter for other parts of your tax return. So let's say you sold a large asset at one point in the year, then there may be tax implications. So, sometimes exchange rates, are more important, but for the FBAR, sometimes it's less depending on your situation.
So what's the FBAR deadline for filing?
It is the same as your tax return. So if you have an extension for your tax return, then you can use that extended deadline for the FBAR.
So is there any other special paperwork you need to file with your taxes besides the FBAR as a foreigner?
So you don't have to file any special paperwork by being a foreigner, but depending on your tax situation and what you own and what you have, there's a possibility. For example, if you own a foreign corporation, you might file a Form 5471. If you own a foreign partnership, if you own a foreign rental property, if you own a foreign business, you might file 8858. If you have a foreign trust, you might file a Form 3520. Possibly a 3520A. You have over 200,000, then you'll file the Form 8938. So there's lots of other forms that an expat will be more likely to file because of living abroad and ownership, but they're not required, and that's all part of that tax return. So there's no additional forms that they would need to file. Technically, 3520 would be separate from your tax return because that's a form for a foreign trust, and that's going to go to a separate office. But in general, the forms are going to be all part of your tax return, but the tax return is going to be the same, Form 1040, and the FBAR is this same form.
Josh, that's so good to hear. Just a bunch of numbers. I never thought I'd be so happy to have someone tell me a bunch of numbers, because it's so nice to know that obviously you know what you're doing, but it's just really nice to get hard answers to these questions, because it's such a scary process of how much did my U.S. taxes change? How much do you need from Spain and that sort of stuff? But it just occurred to me of when we get our Spanish tax returns and we send it to you so that you can be this is what you paid. Are there any steps that we need to think about with that, or it's just here's your return? Yeah,
so we would need a Spanish tax return. So that would be definitely most important. We would definitely need your previous year's tax return. So this year we're asking for a 2023 U.S. tax return, and then a 2024 Spanish tax return, possibly also a 2023 Spanish tax return. And then it's going to depend after that. So do you have U.S. source income? If you do, you'll have a 1099. Did you work for a U.S. company? If you do, you'll need a W-2. From there, it can be anything else. Sometimes Spanish taxes can be calculated in a way, we'll need more information. You own a corporation, a business, depreciation. So it's possible we're going to have questions on that. We may have questions for your Spanish accountant about how everything was calculated and what's there. But definitely anything that's not included in your Spanish tax return we'll need, and then we'll also need, anything from the U.S. So a lot of times when Americans move to Spain, they may have a bank account that has a 1099. They may still have U.S. investments that are going to have also another type of 1099. They may have some income from the U.S. They may still be working for their U.S. company and receive documents there. Now, those should be reported probably in Spain, but it might not have all the information on it. So, there are usually documents. So when we work with clients, we'll send a list of documents we need, in addition to what we usually send as a new client questionnaire. And then we'll ask for a list of documents. And we will need more information than just the Spanish tax return. However, there are some clients who the Spanish tax return, may be enough in addition to the previous U.S. tax return.
You've obviously work with Americans living in all sorts of other countries. What is Universal Tax Professionals' specific experience with Americans living in Spain? How long have you been doing it? Is it something that you guys do often?
Yeah, we've been working with Americans living in Spain since we started about 10 years ago. So we have a lot of experience. And because Americans have been moving to Spain more and more, and all of our clients love it, we've been working with Americans moving to Spain more and more. We do work with lots of other countries, a lot of countries nearby in Europe. We also work with lots of Americans who call me up all the time saying, I want to move to Spain. What do I need to know about my taxes? We work with them before they move. Sometimes we'll start preparing their taxes in the year before they move, so they're all set up. We talked to a lot of people who want to move to Spain, start there, or Americans who've been moving to Spain, and this is something we've been doing now for a while.
That's something we always try to recommend to everyone. Is the first step of doing your taxes in Spain is doing them before you get to Spain. What can someone expect if they are thinking about it?
Yeah, so if you're thinking about moving to Spain, usually if it's just an idea in your head, it might be too early. But once you're kind of set that this is a possibility, your tax return may be similar. Your tax return is not going to change because you were in the U.S., but what does change is now we're really able to help you. So now instead of our conversation being more theoretical, okay, this is what happens, and it sounds kind of like this call. What we will be able to do is look at your specific situation and say, okay, well, this income is going to be taxed this way. This is going to be taxed first in Spain. This is going to, happen. And we're able to give advice that's more geared towards your situation. A big question that I'll get all the time is, hey, I'm moving to Spain. How much am I going to pay in taxes? I don't know, because I don't know anything about it. However, if we prepared your tax return, then we're able to either let you know what it would look like, or we're able to work with your Spanish accountant and then come up with actual numbers. And sometimes that's not so important, for people. Other times it's really important because they need to know, how much money do I need to set aside every month? Who am I paying first? What am I paying? One situation that happens sometimes is that we'll work with clients who didn't use an accountant and they accidentally paid the wrong country, and now they need to pay the right country, and then they'll need to get a refund. Now, that person did double pay his taxes, and that could be almost all of his income, and now they need to wait for that refund. So that's not a good situation to be in. Working with an accountant before you move prevents a situation like that from happening, and making sure you're paying the right country first.
Yeah, there's a time and place to use a professional, and I think all things tax related is, especially when you move abroad, is one of those times and places. A lot of people who live in Spain, they always find out about this new law, the Beckham Law. Do you have experience with that? Is that something that applies in the US, or is it just in Spain?
That applies to Spain. So if you're interested in Beckham Law, you'll definitely want to speak with a Spanish accountant. However, we do work with clients who are on a lower tax rate in Spain because of Beckham's Law. If you're in that situation, it is important to talk to your U.S. accountant, because now your tax rate in Spain is lower. So the question may be, do you have enough foreign tax credits to cover U.S. taxes? So even though you're paying less tax in Spain, now maybe you'll be paying a little bit of tax in the U.S. It's just something to plan for, so you could be aware of what you would pay in the U.S. And it's also possible that it covers your taxes. So it's possible you won't have any tax to pay. It's just something that on a case-by-case basis should be considered. So definitely, when your Spanish tax goes down, you want to prepare to see how it's going to impact your U.S. taxes.
You're not magically removing the amount of money you're going to owe. You're just moving it from one column to another, kind of, potentially.
Overall, you may be paying less. So, when dealing with two countries, just because you're saving a lot of money in one country, you want to look at the overall picture. You want to know, okay, how much am I paying in Spain and how much am I paying in the U.S.? And most likely, overall, you'll be paying less if you're taxed under Beckham's Law. But it's going to depend on your situation.
So one of the biggest questions that we get a lot from a lot of Americans living in Spain in particular is how Spain handles the wealth tax and the capital gains tax, which are very different from the US. For instance, the wealth tax doesn't exist in the US. Is that something that you run into with US taxes and getting tax credits, or does it not really apply?
Yeah, that's going to be something to discuss with your Spanish accountant. Again, it may affect the US side because those might be credits that you can use in the US, but in general, if there's any opportunity to save or plan, that's going to be on the Spanish side.
So if someone's interested in getting started on their taxes with you, what's the first step?
Sure. You can send me an email directly, or you can go on our website and put a comment in there. After that, we could send you our price list, our new client questionnaire, or we could schedule a call if you want to discuss your situation further, discuss our services. After that, we would send you our new client questionnaire, a list of documents we need. Once we receive them, we try to work in a first come, first serve order. We work with a small team, so you'd be assigned an accountant who you would work with, either me or someone else, and then we would be available. You'd be able to email us directly, ask any questions. Once we complete everything, we would send you a draft for review, answer any questions you have at that point, and then eventually you file. A question I often get asked is whether you can prepare the taxes yourself. And I would say the answer is, it depends. If you're an American living in Spain and working in Spain, working one job, you have one source of income, your situation's simple, and maybe you've been preparing your taxes every year till now, you've been using TurboTax, I say give it a try. If you start, preparing your taxes, you realize, hey, I'm paying a lot of money in the US and I'm paying a lot of money in Spain, probably something's wrong. So at that point, I would then, try to seek additional help. TurboTax works great for lots of Americans, but it also is probably the biggest reason why clients come to us to amend their returns because mistakes were made. So I'll give you one example, which I see all the time, which this is important. If you're American and you have an American child living abroad, then there's a good possibility you may be eligible for the refundable child tax credit, which this year is up to $1,700 per child. So we have lots of clients who at the end of the tax process are getting a large refund from the IRS. And sometimes if you use TurboTax, you may be able to prepare a return, prepare it correctly, not owe anything, so you'll owe zero, filed without a problem. But TurboTax did not prompt you to do it in a way where you would be able to receive the refund. And we'll have clients who say, oh, I do my taxes every year without a problem. They'll come to us. I'll say to them, okay, that's fine. And you're right. There's nothing wrong with your taxes. But had you done it differently, and usually the difference is using foreign tax credits instead of the foreign income exclusion, then you could have got a refund. And the IRS will allow you to amend the past 3 tax returns. So we can go back and get a refund. But sometimes we can't amend farther than that.
When we lived in the United States, we always did our taxes ourselves on TurboTax. And now I kind of wonder, maybe I could have been getting more of a refund instead of paying a bunch of tax. Yeah. It took moving abroad to say, it's not worth doing myself.
Something else I'll mention, in 2021, the IRS gave out a $1,400 COVID stimulus payment to all Americans. And if you've not yet received that, you're still able to receive that if you file your 2021 return before April 15th. After that, it goes away. So for anybody who didn't receive the stimulus payment, there's still a possibility to receive that if you file your 2021 return before April 15th.
If you have done it in the past and you weren't 100% sure if you did it correctly, maybe that you could reach out and amend your tax situation.
For sure. Just about that, I'll mention, we get pretty busy when it comes closer to that deadline, and I think all accountants do. So there's no extension for that deadline. So it's best to talk to your accountant earliest or file sooner than later.
You've given us a lot of really specific, actionable advice, but everyone's situation is going to be different. This video is just a jumping off point. Please don't do your taxes just after watching this video. You need to take this seriously, do it correctly, get your deadlines right. And I would honestly, hopefully recommend that everyone work with a professional. It's going to be more complicated than you realize.
Thanks so much, Josh, for sharing all of this knowledge with our viewers. I hope that everyone got as much out of this as we did, because wow, I learned so much from this.
Great. Well, thank you so much for having me.
And we'll talk to you again soon for our taxes.
If you made it this far, I'm very proud of you. A lot of really technical information in there, but it's an important topic, and we're really thankful to Josh for answering all of our questions and, actually knowing what he's talking about when it comes to filing your taxes.
So if you want to join us in that tax journey, click the link in the description below and you can engage the services of Universal Tax Professionals. They're offering free consultations for you, and you can ask some questions, find out what you need to file your US taxes as an American living abroad. They have a free download to a tax guide with some frequently asked questions that they have for you. So check out that link and you will do your taxes correctly. Thanks so much for spending this day with us, and good luck with your taxes wherever you live in the world.
You can put your questions in the comments below, but if they're anything other than what's Josh's email, we're not going to be able to help you.